Hey guys, on today's edition of The Final Bar, my guest is Doug Busch from ChartSmarter, a very capable technical analyst, giving you 3 stocks to pay attention to right here. We're going to have a segment called Crypto Corner, where we'll talk about cryptocurrencies, how they should fit into your big picture thinking about asset allocation. And we're also going to share with you one of our popular mystery charts, a chart you may not be looking at that you probably should starting right now. Ladies and gentlemen, this is The Final Bar. Host Dave Keller. I'm the Chief Market Strategist here at StockCharts.com in Redmond, Washington. Thanks for joining us every weekday after the close here to look at the short-term technical picture, connect it to the long-term trends, and make sure you're on the right side of the momentum out there in the markets. Things are thawing out slowly but surely here in Western Washington, so good to be back in the office. Thanks again for being patient with us as we figured out all the winter weather conditions, but back at full strength here at StockCharts HQ in Redmond. Today, continue to see follow through on the upside. That's been the real story that we've been looking at in the last couple of weeks, if not the last couple of months. Continued leadership from technology, continued strength where you'd expect strength if the bull market is in fine shape. A lot of earnings releases. We're going to talk about financials. We'll talk about healthcare, talk about railroads, talk about some of the places where we're seeing big movements related to earnings. So a lot to cover here, including my guest, Doug Busch from ChartSmarter, and also a mystery chart segment, Crypto Corner. A lot of good things to get to. Before we get any further, though, I did want to remind you about the upcoming events coming up here on The Final Bar. We have next week Greg Schnell on January 21st, the Canadian technician. We have Greg Harmon from Dragonfly Capital on January 22nd. Also on the 22nd, we have our 2020 Market Outlook. This is a really cool, well-done special event featuring some of the ideas and charts from a number of the fellow StockCharts contributors. After that, on January 27th, we have Mark Ungewitter, and then on January 29th, we unveil our special interview with Ralph Acampora called 50 Years on Wall Street, which you're not going to want to miss. So look forward to having you for all of those events coming up on The Final Bar here on StockCharts TV. Let's get to the market recap. So as we've talked in the introduction, what's happened in the last couple weeks, if not the last couple months, and certainly today, is you've had this continued follow through to the upside. And as you know, if you've watched the show, we've talked about leadership, we've talked about technology being at the top, and my guest yesterday, Katie Stockton, was looking at the Qs and talking in particular about technology and what it means relative to the S&P 500, what sort of warning signals to look for. But we've continued to see this unabated uptrend. So again, based on nothing else but the chart, the trend is positive. And until you get some sort of change, some sort of inflection point, it continues to suggest that, long and strong up and to the right, the market is in a healthy condition. There are so many guideposts that tell us we're overextended. And you see that in the form of breadth. You see that just in form of the charts themselves, and they become overbought. There's so many places we see it. But again, higher highs and higher lows by definition are an uptrend. And as long as we continue that pattern of higher highs in an upswing, which we have done again today, if and when we pull back, which we certainly will at some point, as long as we remain above the most recent swing low, so going, in the next couple days, couple weeks, any sort of pullback, you go back to 32.10. In my opinion, that's the support here from the end of last year, beginning of January. As long as we remain above there, the primary trend remains positive, and you have to think more on offense relative to defense. So let's look at some of the themes of what's played out today and think about what it means for this picture of the long-term trend. We've talked a lot about cap tiers and small versus large and how that relates to what we're seeing. I think it's really interesting to see today that small caps are actually at the top. The S&P 600, the small cap index at the top, 1.31%. Mid caps next, almost 1.2%, and then the S&P up the least, 0.84%. So a healthy move across the board with pretty much everything in the green today, as you can see looking at the member dashboard page. In terms of sector rotations, we have technology number one. So again, we've been looking for any sort of change in leadership, any sort of rotation away from technology. Boy, we haven't seen it yet, right? Tech, again, up more than anything, up just over 1 1/3%, followed by industrials, followed by consumer discretionary. So back in consumer, you have this rotation back to consumer discretionary outperforming consumer staples, offense versus defense. Two not so surprising things, or actually one not so surprising, energy at the bottom continues to be underwhelming relative to all these other sectors in good uptrends. So again, suggesting from a technical perspective, you continue to hold off, wait to see some sort of signs of accumulation from energy. One noteworthy maybe disagreement from this offense versus defense is real estate at the top of the pile in terms of being above the market return, just barely just above the market instead of being here at the bottom. So our traditional defensive high dividend paying sector continues to impress. So real estate is a chart. Again, I think a lot of people ignore REITs, especially in an uptrend, and don't ignore the trend. When a sector like that is working, you want to pay attention to it. Looking at the stocks that are on the move, we have a lot of earnings this week, especially from banks, other financials. Also a number of the railroads, so you'll see a couple of them, sort of randomly peppered into the list of new highs. Schwab is actually a really interesting one. This is a chart that has pulled back to, arguably a fairly buyable level. You have a lot of stocks that have pulled back to the 50-day moving average. So even while the broad market keeps moving higher and is sort of at new highs, continues to see new intraday highs, new closing highs, you have something like Schwab and others that have pulled back to an arguably more buyable level, right? So you have Schwab moving back to the 50-day, an ascending 50-day moving average, an upward sloping 50-day moving average, the RSI remaining above 40. If you think the primary trend continues more positively, that's where I would look for some sort of opportunity, something that's pulled back a little bit that you're not buying into, a vertical move. Interesting to note, a couple stocks on the downside. You're going to see some energy names like Oxy and others. See some materials like Freeport-McMoRan. This had been a pretty impressive breakout a couple days ago, but boy, a couple days changes the picture completely. You once again see this range-bound stock at a time when other things are starting to work pretty well. So materials really have not been a great place on a relative basis, especially. But one more I wanted to highlight was Biogen. So biotech, we looked at this earlier this week about how, in my opinion, biotech is a really compelling chart to pay attention to because it's sort of had this nice run and it's in a consolidation, and you either follow through to the upside with biotech or it's a pause before you break down to lower lows. And Biogen is maybe suggesting here the latter, suggesting more weakness than strength. So on a good up day, Biogen down a little bit. We can look at the IBB, which is one of the biotech ETFs. You can see this is still holding up pretty well. So, there are a lot of other names in that space, Amgen and others that are holding up better, but would be interesting to see some of the themes that emerge on individual names and see if the whole biotech group starts to suffer a little bit. But some interesting, very compelling charts there. Especially on the stocks that are moving. I did want to point out just one final couple things here. At the bottom, you can see what was up the most, transportation. And we talk about a traditional Dow theory before, looking at Dow industrials versus Dow transports. You see railroads that have done very, very well. Transportation services up at the top. So you have some industrial groups that are up there. Those trends emerging. Airlines actually don't look too bad. They're starting to bounce up a little bit. So if you see that continued strength from those types of places, suggests that there might be some strength overall, and that Dow theory confirmation of the industrials and the transports moving to new highs is the signal you'd be looking for. So that is our market recap for today. And again, just a nice follow through to the upside. Plenty of names like Schwab and others I'd be screening for stocks pulling back a little bit to see if they're at more buyable levels. Now I want to tease the mystery chart. As you know, if you've watched the show before, we love to do occasionally is bring up a chart, cover up the ticker, and ask you to guess what we're showing you. And the idea is when we come back later in the show, we'll unveil what this is, and I'll share with you what lessons you can get from it, why it's an important chart to pay attention to. The question for all of you now is, what is this chart? All I will tell you, it is a U.S. traded security. We're looking at the last 2 years. We're looking at the price with the 50 and 200 day. We're looking at the RSI. We're looking at the relative strength. What is this? You can throw a ticker or whatever a name, whatever you want in the Q&A section on the StockCharts TV screen. Later in the broadcast, we'll unveil what this mystery chart is and why it's an important one to pay attention to. So put in your guesses as soon as you can. Our next segment is called Crypto Corner. We have cryptocurrency data on StockCharts.com, and we love to just help people understand how to think about cryptos, because many of you, especially if you've been investing for a number of years, cryptocurrencies and the whole crypto digital assets type of asset class is very difficult to get your head around because it's so different than other things that you've looked at, other things you've invested in. So what we want to try to do is educate you as much as we can about what these currencies mean, how to think about them relative to other asset classes, and so forth. And we're going to spend a couple minutes here in a crypto corner to just talk about some things there. So question number one, how do you actually get to crypto data? Two ways that are easiest. Number one, if you go to your member dashboard page, in the middle you have your market overview, and you'll see we've added a crypto section there. This just shows you the name of the different cryptocurrencies, and it's kind of loosely oriented in order of popularity. So Bitcoin, Ethereum, Ripple, Bitcoin Cash, Litecoin, these are some that you probably have heard of. And if you're not too familiar with them, this is a great place to just understand what they are. You can click on them, get a quick preview on the right. This is showing the last couple days, but you can go in more detail and start to look at the charts by clicking on the icons at the bottom. The other thing you can do if you're not familiar is go to the market summary page. And when you go to the market summary page, again, depending on different ways you can look at this, toward the bottom, you're going to see another segment called cryptocurrencies. This is going to list them all again, sort of in popularity order. But here you can actually resort them on how they've moved today. You can see what's up and down the most. And then you can also click on them to get further detail and look at charts, look at them in further, get some more clarity on where they've come from. I wanted to just look at Bitcoin here. That's certainly the most popular, tends to be the most liquid, the most widely followed in terms of the price levels. People tend to be aware of Bitcoin if they're aware of any of these. So I wanted to show you the chart of Bitcoin. The ticker's $BTC/USD. And this is the last 1 year. I'm looking at price, looking at the RSI, looking at relative strength. Again, the more you watch this show, you're going to get very comfortable with this chart layout because this is sort of my main chart style for most things. It helps me understand the things that I want to. What I wanted to show with you is just a pattern that we've seen on Bitcoin. In the first half of last year, you had this nice rally into the high in June when it peaked up in the mid 10,000s, right up to almost to 14,000. You then saw this big distribution, and while this looks like just a little jump on the chart, this is going from just under 14,000 to around 9,000. So that's actually a huge jump. The volatility that occurs with cryptocurrencies are much wider, much larger than you're probably comfortable with. And so it's important to understand that this chart is very different than the other charts you're probably looking at. But what has happened since then is you've had this downtrend of lower highs and lower lows, just this continued stepwise motion, lower and lower, finally hit bottom around 6,500, and that was in the middle of December. Since then, that pattern has actually reversed. So you've now seen higher lows followed by higher highs, and this trend has continued. So in the last couple weeks, sort of year to date, you've seen higher highs and higher lows as Bitcoin appreciates. Why it's an interesting chart right now, why we wanted to do this segment today, is because it's approaching where you might expect some resistance for a number of reasons. Number one, the RSI is just at the overbought region in the last couple of days. And again, that tends to be where a market will take a breather at the very least. You saw that, last February, big run up, then a little bit of a pause before a continued uptrend. So even though the larger trend might be up, it's expecting a little bit of a pullback, and that overbought condition is happening right as we approach the 200-day moving average in red, also the first Fibonacci retracement level based on that peak to valley that we saw from June down to the low in December. So a couple of things in terms of momentum, but also in terms of price resistance, suggesting we're hitting a level at which you might expect a bit of a pullback. What I did want to point out, though, is the reason why a lot of people are interested in things like Bitcoin is because it also includes some correlations. So if we very quickly at the bottom here add correlation, we can do something like the S&P 500. Now I can see the rolling 20-day correlation, 20-bar correlation of what this is. And what's interesting here is it is sometimes very positively correlated with stocks, other times very negatively correlated with stocks, but not super consistent. So in terms of diversifying the movements of your portfolio, you're diversifying your holdings and cushioning yourself from different unexpected movements in the market, some cryptocurrencies actually have a very different return profile, and the correlation, I think, illustrates that very, very well. So that is our quick run through cryptocurrencies using our crypto tools on StockCharts.com. We're going to take a quick commercial break. We're going to be back with my guest, Doug Busch from Chart Smarter. We'll see you back in a minute.
I was staring at the north wall of my barn. Okay. It's 70 feet long, it's about 18 feet high, and just blank. And I said to myself, 2017, I'm going to be 50 years in the business. Wouldn't it be cool if I could just put the history of the stock market. That's where the idea came from. I wanted to capture my 50 years.
Hello, everyone. Welcome back to The Final Bar. I'm your host, Dave Keller with StockCharts.com. Please keep your questions and your feedback coming to us. The Final Bar at StockCharts.com. We're going to do another mailbag segment tomorrow. We'd love to answer your questions, so either send them to us via email or just put in questions during the Q&A segment during this show, and we'll take a look at them overnight and address some of the questions tomorrow. I wanted to bring on my guest, Doug Busch. Doug is from ChartSmarter. He is in the New York City area, has become a good friend over the years. And Doug, thank you so much for coming on the show today.
Thank you for having me, Dave.
So you took the time to send a couple charts to me ahead of time, which I really appreciate. You are a power user of StockCharts.com. I've always been impressed by how you use the platform, the charts that you bring up here. There's sort of an animal theme to the names that you sent over, starting with Elan, E-L-A-N. What are you seeing here?
Yeah, well, if you take a look at this chart here, obviously, if you take a look, it broke above that 200-day moving average, which was important. That was on Tuesday. It was below that line for about 5 months. And if you look back to the end of last year, it failed to break below that descending triangle. And keep in mind, moves that tend to break in the opposite direction of what's perceived tend to be very swift. That was the case here. If you looked at this chart today, it actually bounced off that round 30 number and the 200-day moving average. So I think the likelihood of this being a bull trap is very small. I like this chart here. I think it could be long here with a stop at 28, Dave.
It's such a great chart, and I've always, I've talked on the show a lot about a rotation from distribution to accumulation. It certainly appears to be what you're showing them. It's this nice rotation back above the 200-day moving average. It's a really interesting chart. The second one's ZTS. What are you seeing here?
Yeah, Zoetis, another one. I mean, look, Elan, that was a spinoff from Eli Lilly. This one was a spinoff from Pfizer. A couple of these big pharma names trying to take advantage of this animal spirit, if you will. Again, I'm a big round number theory guy. You see this 130 number was pretty much a roadblock. Last September, last October, finally broke above it last December. You can see there was also a break above a double bottom of 130.30, and we like that because we know the best breakouts tend to work right away. This one then proceeded to break through that bull flag trigger of 134. This carries a measured move to 150. I like this name. I like it a lot. I think it can go higher from here.
It's really interesting. And at the bottom, I just noticed, I was thinking you were showing it relative to the S&P, but you're actually doing it relative to the healthcare sector. What does it mean to you? How do you think about the relative picture versus what you're seeing on the chart at the top?
Well, it's, as you can see, it sort of hasn't really, let's be honest, healthcare had a great second half to last year. It was helped, obviously, by biotech. Had a 12-week winning streak to end 2019. So this one, you can see it still hasn't hit those highs it made last year, but I think this name has a lot of momentum behind it. I think it's going higher. I think you want to stay long this name, Dave.
A second great chart. The third one, CTLT. So what are you seeing on this one?
Yeah, this is a weekly chart. This is probably the lesser known of the three. This name has doubled, actually, since back-to-back spinning top candles. If you look at the end of 2018 there, that's why I like using candles as well, just to throw that in. I mean, those two candles actually were preceded by a 3-week losing streak that lost a quarter of its value. So a lot of value in watching candlesticks. You can see here it broke above a double bottom with handle candle. And then, of course, the best breakouts, like I said, tend to work right away. This current cup base actually found support, which was a good sign, near that double bottom with handle. I like that. This week, it's up better than 6%, Dave. Took out a nice 58.48 cup base pivot. I like this name. I think you can own it here. Again, I like the round number. If it pulls back towards 60, fantastic. I like the name right here. I think all three of these names are going to participate well in 2020.
It's such a great chart, and I love, you mentioned candlesticks, and it's, in terms of a visualization, just this middle of the chart showing you the sell-off at the end of 2018 and then the rally in 2019, the weekly candles, that's where it almost jumps off the page, the different characteristics, right? From between the left side of that and the right side, and how it just completely turned and started to rally. I'd love to know with something like this, right? Breaking to new highs, which feels good, breaking to new relative highs, which feels good, but then it's overbought, right? With an RSI above 70. How do you sort of, relate those to one another? Are you okay buying something that's overbought, or do you wait for some moment? Like, how do you think about that as part of your overall picture of the stock?
You know what? I'll be honest with you. I do take it into account, Dave, but to me, price action supersedes all other indicators. Every indicator basically out there reacts to price. So I think it's best to just follow price. And keep in mind, in a bull market, overbought conditions are normal. Can it pull back? I think so. But I think long term, this is a winner. As long, I'd use a stop of 56, but it's a great chart. It's actually probably my favorite of the three.
This is great, Doug. Three fantastic stocks, three good charts, and I've always enjoyed following your work. I love the way that you represent things visually and think as a stock picker. So thanks for coming on the show. Really appreciate it.
Dave, thank you for having me.
Folks, that was Doug Busch from Chart Smarter, based in New York. Fantastic technical analyst. And again, I mentioned, I think on Twitter, I think of Doug as a stock picker's technical analyst. He seems to always find stocks that are interesting, compelling charts to pay attention to. So worth looking him up if you're not as familiar with his work. Let's go to our next segment, which is the mystery chart. Do you know what the chart is? Any guesses as to what this might be? Okay, guess number one, PVE. That's an interesting one. All right, we'll bring that up. All right, okay. Oh, PVE, sorry. PVE, PBE. All right, okay, biotech, interesting guess. Coca-Cola was another guess. Boy, this was a miss, team final bar, but I think I got you. But don't feel bad. There are so many charts. I think what you probably found, there are so many charts that look like this. And that's what was actually so interesting. When I was picking out a mystery chart, I found this felt like a lot of other charts I'd been looking at. If you think about the chart of Schwab, which was something that had pulled back to the 50-day, and I was thinking, wow, interesting to see a group that's pulling back to a buyable level at a time when so many things are sort of up and to the right. And Schwab is a bit of a hint. This is actually the Regional Banks Index. KRE is the ETF that I'm using here. What's interesting about this chart, again, if you look at the last 2 years, you had sort of this V bottom at the end of 2018, right? Sort of the market low on Christmas Eve, the rally back in a position of strength. But then since then, sort of a choppy sideways movement. This is when financials really struggled, especially regional banks. And from there, just look at how the picture just started to improve. You start to see a pattern of higher highs, higher lows. And again, what I love to do is just unplug from the overall market environment, forget about what the S&P looks like, forget about what technology looks like, and just look at this individual chart, just look at the price. How do you feel about this chart? And for me, I'm seeing a pattern of higher highs and higher lows, and this is pulled back to a swing low that's in a much higher point, and it's pulled back to an upward sloping 50-day, and the RSI has remained just above 40. And that feels to me like one of those textbook buyable pullbacks in a long-term uptrend. Now, this has underperformed for a little bit, and the reason is because obviously so many things are up and to the right. Apple and a lot of hardware and other things are sort of going up and to the right. A lot of healthcare sort of at new highs. Financials have certainly not been the case. The XLF is more flat. You can see the regional banks index is actually down a little bit, while financials as a whole are flat. But again, if you ignore what's happening elsewhere and just look at the chart, it feels like, again, if you assume that this trend is continuing and continuing to build momentum, this is sort of that weaker point where it's an opportunity to get in at a more optimal level. So this is the KRE, it's the Regional Bank ETF. What I think at this point is really key is the same as what we've talked about recently with the financial sector as a whole. You want to be looking at where it is relative to its most recent swing low. So arguably we have established a new low based on the rally today, based on this potential bottoming point just above 56. The question is, do we hold that level, right? Do we establish a higher low and continue this pattern? The next step should be a break above 59, which would continue that pattern of higher highs. And again, if we do pull back any further, I'm looking down right to this point and looking at the RSI and see if it remains above 40. And this is a perfect illustration. The other reason why I thought it was a great mystery chart is if you look at this period here, which was the middle of 2019, look at the sell-offs in price. Now, again, this is not a primary uptrend. It's really more of a sideways trend, more of a consolidation period, if not a bit of a pullback, right? So you had some lower highs, some lower lows, but it wasn't purely directional. It was more consolidation focused. But look at the RSI. So it became oversold. It never really got above an RSI level of 60, which is what a bearish phase tends to look like. Once we finally break that pattern, we get more in the 40 to 80 range. That tells you that we're more of a bullish configuration. And you can see that since it's broken back above the 200-day here last September, we've never gotten below an RSI of 40. So it's actually holding up in pretty good shape. So potentially an interesting time to be looking at regional banks. I think that has implications for the broader market, especially for the financial sector, thinking about where some healthy pullbacks might become opportunities for you. So KRE was the answer there. Thanks everyone for guessing. And again, hopefully if you look back at the episodes we've done with the mystery chart, you get some good ideas to pay attention to. But folks, we need to wrap the show with the 3 in 3. So at the end of every show, 3 charts in 3 minutes. If these are not on your radar yet, I hope they are from this moment on. The first chart is the small cap ETF, the Russell 2000 ETF, the IWM. What's interesting here is we are testing all-time highs. We're testing new highs. So while large cap and mega cap stocks have certainly been the leadership, and big cap tech, healthcare, other sectors, consumer names have been in a position of strength and really driven the market higher. One of the things we've talked about is this underperformance of small caps, or at the very least a lack of leadership from small caps. But what's interesting is the S&P at well to new highs, the Russell 2000 not quite to new highs, but getting very, very close. And we're testing the peak from last August, actually August of the previous year, August of 2018. So we've now broken above there. We're in a primary uptrend now. We're testing that all-time high resistance level. The RSI is at 75, nearing what could be the extremely overbought level. An RSI above 80 would be really compelling for small caps, suggesting so much further upside, or so much upside momentum. You probably have to process that by going to further highs beyond. The second chart for my 3 in 3 today is the China Large Cap ETF, ticker FXI. There are a number of different China ETFs that we've looked at over time, and there are different reasons to pay attention to different ones. So don't think that this is the only way I like to look at it, but it's one of the more liquid ones. It's one I like to refer to pretty often. This is another one that's breaking to new highs, arguably. It's testing the peak from April of last year. This is where China had topped out before the sell-off going into the summer months, the low that it hit in August. This is a period of underperforming U.S. stocks, and since then it's really never recovered on a relative basis. Now we have obviously the tariff news, the deal between the U.S. and China, with all sorts of implications. The question now is how much of that positivity, potential upside is already baked into this chart. That's a question I don't know the answer to, so I'm following the price and seeing what happens. So breaking, if not testing new highs. Also a potential negative divergence here with lower peaks in the RSI with higher peaks in price. So definitely a chart to watch. And then the third one, we talked about Bitcoin earlier in our crypto corner. And again, my goal with that segment is just to help you understand cryptocurrencies a little better, understand how to think about digital assets. This is looking at an asset allocation routine going from the market low in December of 2018 and seeing what's happened since then. This in black is the S&P 500 up about 44% from that point. Then you have other assets, oil, gold, the 10-year bond, and then the dollar here at the bottom. If you look at the top one in orange, this is Bitcoin. So the return of Bitcoin up almost 113%, while the S&P is up 44%. Now you can see these are huge percent swings, but I like to point out the fact that there are returns to be had in digital assets if you have a good technical approach for quantifying what you're seeing. And ladies and gentlemen, that is our show for today on a Thursday afternoon. Thanks for joining me on the Final Bar every weekday after the close to connect the short-term price movements to the long-term trends. Special thanks to my guest, Doug Busch from ChartSmart. Appreciate him sharing his 3 charts to pay attention to. We're going to have a mailbag segment tomorrow, so please send any of your questions or feedback to the Final Bar at StockCharts.com. For StockCharts in Redmond, Washington, I'm Dave Keller. Have a great night.